Hello, my name's Ian Stocks. Welcome to the Smells Goldie webinar, in which we're going to look at the economic impact of COVID-19 and government support measures. It's clear that the impact's going to be great, but the full force of the pandemic is yet to be felt. In the weeks and months to come, we're likely to see a continuation of volatility in financial markets, a rise in unemployment, and the unfortunate failure of thousands of businesses worldwide. Despite the ongoing efforts of the UK government, the country is likely to experience a significant decline in economic growth, and small to medium-sized businesses are likely to feel the brunt of this. Here are some of the key facts that you've probably already heard. So that 6 in 10 businesses could run out of cash in the next 3 months. 20% of businesses only have enough money for 1 month. More than £400 billion worth of economic funding and guarantees has been made available by the government. Rules around tax payments, debt and insolvency have been softened. Bank of England base rate has been cut to just 0.1%. In the light of this, it's important that businesses of all sizes seek support from their trusted advisors to help them survive and hopefully succeed in the months and years to come. So what steps is the government taking? The current level of response from the British government is unheard of in times of peace, and whilst there are likely to be struggles ahead for all of us, had these measures not been in place, then many more businesses would likely to fail as a result of the pandemic and the government's decision to lock down the country. The government's promised to review the measures that it's put in place and extend them where necessary. It said it's committed to do whatever it takes to keep businesses going and to keep workers employed. Some key measures that the businesses should look at doing include the Coronavirus Business Interruption Loan Scheme, known as CBILS, Coronavirus Job Retention Scheme, CJRS, the Small Business Grants Fund, the Retail and Leisure Grants Fund, time to pay arrangements, and tax deferrals. In this presentation, I'll go over some of the basics of these measures, and then I'll look to answer any queries you may have at the end. I'll try to go into as much detail as possible, but I'm sure that you're likely to have questions specific to your organisation, and so I'd recommend that you seek one-to-one consultation with any of our team after this presentation and look at the detailed information on our dedicated COVID-19 hub. So firstly, we'll look at the Coronavirus Business Interruption Loan Scheme. Few businesses want to be taking on additional debt at this uncertain period, but these government-backed schemes are one way in which businesses can help bridge any gaps in their short-term cash flow. The scheme provides UK-based SMEs with access to facilities of between £1,000 and £5 million, interest-free for 12 months, backed by an 80% guarantee from the government direct to the lender. These are open to any businesses which apply to the following guidelines. So firstly, a turnover under £45 million, of which more than 50% is generated through trading activities. Any business activity has to be in the UK and have a borrowing proposal which the lender would consider viable were it not for the current pandemic. And finally, it can confirm that it has been adversely impacted by COVID-19. The loans are actually applied for via accredited lenders, but the scheme is being administered by the British Business Bank. Initially, the scheme was open to businesses that were unable to access facilities on normal commercial terms. However, HM Treasury has now confirmed that any business that meets the main criteria must be considered for a CBILS facility, even if they would otherwise qualify for a commercial facility. Funding can be in the form of loans, overdrafts, invoice finance or asset finance, although each lender will be able to choose which elements of the scheme it supports. Most lenders are going down the loan route. Businesses should remember that they are 100% liable for the debt, despite government guarantees, and that interest will be charged at regular commercial rates, up to 30% in the case of some of the smaller lenders, after the initial interest-free period ends. To apply for funding, you should firstly decide which form of finance you require and identify which of the accredited lenders can offer it. This can be done using the British Business Bank's filter tool on its website. The filter allows you to put in the region where your business is based and the type of loan you require, and it will provide you with a list of suitable potential accredited lenders. Research which lender is offering each facility via their website and decide how much funding you require. You'll then need to collate all the information to make an application, including up-to-date business plan, cash flow forecasts, historic accounts and details of assets. You then need to make an application with your chosen lender which suits your requirements. Remember, the loan application process is likely to differ from lender to lender, so do your research first. In practice, you should firstly seek finance through a lender that you have an existing relationship with, as they are most likely to be supportive. So now let's look at the Coronavirus Job Retention Scheme, the CJRS. At the start of this crisis, many employees feared for their job, and unfortunately some businesses have had to lay off staff and make some people redundant already. In response to this, the government's launched the CJRS. This is a temporary scheme open to all UK employers for at least 3 months starting from the 1st of March 2020. That is designed to support employers whose operations have been severely affected by COVID-19. Employers can use a portal to claim for 80% of their furloughed employees' usual monthly wage costs, up to a maximum of £2,500 per month, plus the associated employer national insurance contributions and minimum automatic enrolment employer pension contributions on that wage. The scheme applies to employees on leave of absence, referred to as furloughed workers. These are employees who are on the payroll but who might normally be laid off or made redundant due to lack of work. Furloughed employees must have been on the payroll on the 19th of March 2020 and can be of any type of contract, including full-time, part-time, employees on agency contracts, employees on flexible or 0 hours contracts. To be eligible for the subsidy, an employee must not undertake any work on behalf of the organisation, and this includes providing services or generating any revenue. However, they can undertake other voluntary work or do training as long as it does not generate income for the business. If you made employees redundant or they stopped working for you on or after the 19th of March 2020, you can re-employ them, put them on furlough and claim for their wages through the scheme. As an employer, it's your responsibility to calculate how much of the employee's salary you can claim for, including the amount of employee national insurance contributions and the employer pension contributions that they're entitled to. Before making a claim, it is important that employers communicate changes with staff. Employers should discuss with their staff and make any changes to the employment contracts by agreement. Existing employment law continues to apply and should be considered when changing an employee's status. To be eligible, an employer must write to their employee confirming that they have been furloughed and keep a record of this communication. The employer must then submit the following information to HMRC: your PAYE reference number, the number of employees being furloughed, the claim period, both start and end, amount claimed per the minimum length of furloughing of 3 weeks, the bank account number and sort code, and your contact name and telephone number. You can only submit one claim at least every 3 weeks, which is the minimum length an employee can be furloughed for, and these can be backdated until the 1st of March. The scheme will continue for 3 months, but the Chancellor indicated that the scheme may be extended. Once HMRC has received your claim and determined that you're eligible for the grant, they will pay it via the BACS system to your UK bank account. A claim should be made in accordance with the actual payroll amounts at the point at which you run a payroll or in advance of an imminent payroll. You must pay the employee all the grant you receive for their gross pay. No fees can be deducted from the money that's granted. The Chancellor has announced that he expects the first grants under the scheme to be paid before the 1st of April 2020, and the HMRC portal will be open from the 20th of April, but more detail is coming out all of the time. This scheme is just one of a number of measures that the Chancellor has announced to support businesses. The furlough process itself is different for company directors and LLP members. Company directors can be furloughed following a decision of the board. Meanwhile, the furlough of an LLP member may require the agreement between the LLP and the individual member concerned, or a variation of the terms of the LLP agreement. The reference salary for the scheme will be the member's profit allocation. Now we can look at some measures for the self-employed via the Self-Employed Income Support Scheme, or CJRS. Of course, the significant reduction in economic activity in the UK is also having a significant impact on more than 5 million people in the UK who are self-employed. The response to this crisis amongst those in the sector, the government has introduced the Coronavirus Self-Employed Income Support Scheme, or CJRS, which is intended to deliver a similar level of support to the self-employed as those who have been employed. This will pay self-employed individuals an amount equivalent to 80% of their average monthly trading profits, capped at £2,500, to cover at least the 3 months from March. The amount will be paid in a single lump sum and will be based upon tax returns from 2016-17, 17-18 and 18-19. A self-employed individual must have trading profits of no more than £50,000 per annum and must receive the majority of their income from self-employment to be eligible. Trading profits will either be based on an average of the 16-17, 17-18 or 18-19 tax years, or where a person has only been self-employed for just over a year, their trading profits and total income in 18-19. Therefore, you must have submitted a self-assessment tax return for 2018-19. Anyone who has missed the deadline will have 4 weeks from the 26th of March to do so before they can become eligible for the scheme. People who pay themselves a salary and dividends through their own company will not be eligible for this scheme, but could be eligible for the Coronavirus Job Retention Scheme if they use PAYE. Individuals should not contact HMRC now. HMRC will use existing information to check potential eligibility and invite applications once the scheme is operational. HMRC will then pay the grant directly to eligible payments bank accounts. HMRC is urgently working to deliver the scheme. Grants are expected to start to be paid out by the beginning of June 2020. HMRC is currently working to deliver the scheme, but grants are expected to start to be paid and will be paid as a lump sum covering 3 months. The government has said that this time is necessary to ensure that the scheme is both deliverable and fair. So now let's look at time to pay arrangements. The Chancellor, Rishi Sunak, has announced that as part of the package of measures to address the economic impact of coronavirus, HMRC will provide time to pay arrangements to businesses and self-employed individuals in financial distress with the outstanding tax liabilities. Time to pay can include agreeing an instalment arrangement for the payment of outstanding taxes, suspending debt collection proceedings, or cancelling penalties and interest where you have administrative difficulties in contacting or paying HMRC immediately. HMRC has established a dedicated helpline to help taxpayers seek time to pay arrangements. If you're struggling to pay your taxes, then we recommend that you call them as soon as you can. Moving now to the Small Business Grants Fund. All businesses in England in receipt of either Small Business Rates Relief or Rural Rates Relief in the business rate system will be eligible for a grant of £10,000. Businesses should be contacted by their local authorities who will outline how they claim a grant, and many local authorities now have the appropriate forms available on their websites. In some cases, where businesses have an existing direct debit to pay business rates, local authorities can handle the application automatically, or they may request additional details via an online form. Many local authorities will have already contacted those businesses that are eligible, and some have already received funding. Now let's look at the Retail, Hospitality and Leisure Grant Fund. Businesses that would have received the expanded retail discount on the 11th of March with a rateable value of less than £51,000 are eligible for cash grants for property they own and operate from. Those with property that has a rateable value of up to £15,000 will receive a grant of £10,000, while those with a property that has a rateable value of between £15,000 and £51,000 will receive a grant of £25,000. Businesses with a rateable value of over £51,000 are not eligible. Charities that otherwise would not meet the criteria, but whose bill for the 11th of March was reduced to nil by a local discretionary award, are still eligible for the grant. Properties that are occupied for personal use, such as private stables, beach huts, moorings, car parks and parking spaces, are excluded from both schemes. Additionally, businesses that were in liquidation or were dissolved as at the 11th of March cannot apply for either scheme. If you believe you're eligible for either this scheme or the small business scheme but haven't been contacted, please speak directly to your local authority. Moving now to the business rates relief. The government has introduced a business rates holiday for retail, hospitality and leisure businesses in England for the 2021 tax year. Children's nurseries, estate agents, bingo halls and letting agents are also eligible for this relief. During the period, no business rates need to be paid, and this will be applied automatically by your local authority. By eliminating the need to pay rates, the government hopes that businesses can free up some cash flow, but considering many of these establishments are now shut or due to the stay-at-home advice, it isn't clear how big an impact it will have. Alongside this, the government has also ensured that those on a commercial lease cannot be evicted in the next 3 months. However, any arrears accrued will have to be paid at a later date. Let's now consider statutory sick pay, or SSP. One of the first measures introduced by the government was a change to SSP to help employees who needed to self-isolate. Under the new rules, employees can claim SSP from the first day of absence due to a COVID-19 infection or self-isolation related to the virus. Only qualifying employees whose average weekly earnings above £118 are entitled to SSP, which is paid at a rate of £94.25 per week. Employers with fewer than 250 employees will also be able to claim back the first 2 weeks' worth of SSP per employee. These measures will remain in place until the 13th of November 2020. Most employees will not be able to obtain a doctor's fit note, but can apply for a notice of self-isolation via NHS 111 online to evidence their absence. So now let's look at deferring VAT. VAT payments have been deferred by 3 months from the 20th of March 2020 until the 30th of June 2020. During this period, businesses will not need to make VAT payments to HMRC. Businesses should continue to report VAT as usual. VAT refunds and reclaims will be paid by the government as normal. Businesses will be expected to pay reported VAT at a later date. This is only intended as a very temporary payment holiday. In order to take advantage of this, it's important that businesses cancel their existing direct debits to HMRC with their banks, or it will continue to take the payment. So what else can we do? We can look at deferring income tax. Income tax self-assessment payments due on the 31st of July 2020 will be deferred until the 31st of January 2021. HMRC has confirmed that all self-assessment taxpayers can benefit from an extension to the July payment date and not just the self-employed. This is an automatic offer and is not necessary to apply to benefit from it. HMRC is urging that anyone who is still able to pay their second self-assessment payment by the July deadline should do so if they can. No penalties or interest for late payment will be charged during the deferral period. Finally, universal credit. If you cannot work due to coronavirus and are self-employed, you are not likely to be eligible for sick pay and may find that the volume of work available to you subsides. Although you may be able to access the newly announced Self-Employment Income Support Scheme from June, you may also require additional help via the benefits system. If you find yourself in this situation, you can apply for universal credit and/or apply for the New Style Employment and Support Allowance, or the ESA, to top up your income. It's strongly advised that you don't delay making a benefit claim if you think that you may be affected by the virus. To make a claim, you will not be required to produce a fit note. The government has confirmed that self-employed individuals can claim ESA from the first day of illness or self-isolation instead of waiting for 7 days, but it may take several weeks for a claim to be processed under universal credit. Through ESA, you can claim up to £73 per week. The amount won't be affected by either you or your partner's savings or income, though if you receive a private pension worth more than £85 per week, it could be reduced. Payments for ESA are made fortnightly in arrears. Claimants who meet the criteria should therefore receive their first payment after 2 weeks. Those who are self-isolating will not be required to go to a job centre to begin this process, as it can all be done online. To help those applying for universal credit, the government has also removed the minimum income floor. Typically, if you've been running a business for a year or longer, when you claim universal credit, the government works out your benefit payment based on the minimum income floor. Removing this floor means that some claimants will get extra money to make up for lost earnings if they decrease due to the coronavirus. So for assistance with any of the issues covered in this presentation, please call or email your normal contact at Smales Goldie. Thank you for listening.